The more charts we go, and this information is piggybacking off of last night's information that was about simple moving averages, weighted moving averages, along with accounting, cadence, and pi. So naturally, we'd like to play it close, just so you can get a sneak peek behind the curtain of the Wizard of Oz, so that you can understand simple moving averages. Remember, we travel down through the positive, down through green, and up through the negative. And we can see the flipping here of the death cross. It occurred here of the 50 and the 200. The channel with black borders has flipped from positive, which is red, to green. So it holds true here, where we flipped down through positive. Before that channel closed out, we were beneath it. You can see some other channels here. And this is the 13 and the 48. And again, not to give a whole nother speech or talk on last night's information, but we're piggybacking off of information because you see openings and closings here. So this held true. Before this channel went from positive to negative, when it was closing out to go negative, we were beneath it because we traveled down through positive of the 13 and the 48. Consequently, down through positive of the 50 and the 200. And even more detail, consequently, down through positive of the 9 and the 21. All can be seen here. And now let's take the 200 and the 400 away, our zone where the dotted green lines are, because that's where a decision is usually made, a decision. And let's take the 111 and the 700 away. So we're going to take the dotted green lines and the dotted white lines away so that everything can expand. And keep in mind, run XRP on a 5-minute chart on purpose because we're playing it close. We know that we travel up through the negative. The 13 and the 48, the dotted orange lines are coming to a close. We must be above that negative before it closes. And here is the close here that's triggering over here. Now this is playing it really, really close. You can see the support and resistance lines within that. And the whole idea is we flipped with the 13 and the 48, really expanded so we can really see that 13 and the 48. You see before the red flipped, we were above it, ever so slightly above it, and then we cascaded beneath it as the channel began to open up. So remember, we can travel up through the negative but down through the positive. So you can gauge to see if this is looking good or not. Now you see you travel up through negative of the 9 and the 21, playing it really close right on the border there. And when we flip, we can officially travel down through the positive. And this is playing it really close. You must be beneath it before it closes out, ever so close. And now we're negative on the 9 and the 21. Okay? And something's going on with the 13 and the 48 here. You can see the yellow beginning to open up, and we're watching the 9 and the 21 to see when it's about to close, because we should be above it. Now we can't also forget the 50 and the 200. This is in negative territory here, as we can see here. So as things align on the 5-minute chart, we know we have to travel up through the negative here. So most likely, whenever we have that 9 and the 21 death cross that opens here and the yellow is beginning to show, along with the 13 and the 48, whatever was going on up in here, a little messy, a little choppy. Whenever we get the death cross opening up again of the 13 and the 48, as well as the 9 and the 21, then we can travel up. This thing may happen relatively quickly on this 5-minute chart. And notice the golden cross of the 1 and the 3 wants to come in, which can trigger the 2 and the 6 as we look at cadence. Now, let's look at the 2-pole oscillator here. Interesting. We can see the death cross of the 13 and the 48 wants to come in here. So we have our little indicators to help our eyes, because many times things are too small to see as we look at truths holding in the pattern of the chart. Let's reapply the 200 and the 400 simple moving average, as well as the 111 and 700 weighted moving average. The dotted green lines and the dotted white lines, here they come. And you know, we can have a temporary bump up to a certain price point, negative, before it closes. But it has to come to more of a pinch and a squeeze, and then you might be set up to cascade down through green, right? And so you can see about the price point to the right of the dotted line here, okay? And you can see about the price point of this line here. And we know that within this green channel, the dotted green line, you're in decision-making territory within the dotted green lines. That's the 200 and the 400. So this thing is looking pretty interesting. Now, we started on that 5-minute chart because today, as you look at the picture overall, and some people like to play it close like that, but it's telling you that we can have a quick bump up and then we can go down through green. All right. So yesterday's information, even though I don't think I had the digital microphone on and the recording had to interpret the analog signal, turn it to digital, and that really weighs on the processing power of the computer here. And then you start picking up a delay the longer the presentation goes on. But sometimes the delay is even training, because you should be able to decide what's going to happen before I even speak it, because the presentation and the information is so good and it's so accurate and it holds so true 90 to 95% of the places in the chart. I would be bold as to say 100, but of course we never want to assume until we literally see. Okay, so now let's cascade to an 11-minute chart, and we're beyond 704. We're going to make this presentation quick. We'll periodically take the 111 and 700 away, as well as the 200 and 400 away, and you can see where you are here. This channel is massive, right? And so as we look at the price point, even though we are sloping upward with an incline on the bottom border of the 111 and the 700 simple moving average, we can see about the price point. Now, I'm looking at the dotted line to the left and where the white line meet. And I know this is a few hours in here. So I'll just come about up in here. I'll say, okay, about 210, 211. Because as time progresses, we'll have some oscillations up and down. Let's remove the 200 and 400 simple moving average, as well as the 111 and 700. All right, so the dotted white lines and green lines are removed. This expands a little bit, and you can see where you are. You know that before this channel closes out here, that we should be above it because we travel up through negative. We can see that's holding true for the negative territory of the 9 and the 21. Before it closed out, we were above it. Now, we do know things are a little choppy and messy in here because we just saw that on the 5-minute chart. A decision is being made. Anytime you see things flat like that, you best believe the Fibonacci Bollinger Bands are coming to a pinch. And especially true on the 5-minute chart, even though you don't really need to put those on. You know, a decision is made within the dotted green lines, even though we took those away. Right now, support is greater than resistance. So it looks like we may have some upward price action. As we have said, as this 13 and 48 death cross comes to a close, we should be above it. And notice what's tracking with it. The massive golden cross of the 50 and the 100. So sooner or later, we'll get a large red downward triangle as the 50 and the 200. That which is in the black borders comes to a close. Before it closes, you will be underneath it. So you can understand price action, a bump up as the 13 and the 48 closes. And of course, as it comes to a pinch, you know, it's an incline. I don't necessarily want to say $2.22 because as time progresses, it will converge at a certain point before they meet and things begin to flip. So you can spy with your little eye if you were to do geometry where the bottom may possibly meet at a certain trajectory as well as the top. All right, and you can gauge the time frame by looking downward to the vertical line here. Okay, now looks like we'll have a bump up and then traverse down because we eventually have to be below this 50 and 200 channel to close it out. Now, other things will be developing in the chart too. Let's apply the 200 and 400 simple moving average, the dotted green lines, as well as the 111 and 700, the dotted white lines. Here they come. And now that you see this, other things have to develop in the chart too. But we can have a move up and then a move down. All right. Now, we're not in our zone where a decision has to be made. But when we get in there, we're going to be watching things really closely. And most likely, if we breach the bottom channel of the 200 and 400, the idea is we may be going down. Okay. Now, we can have oscillations up and down because the future is yet to be determined. You can count cadence and see what's coming next. Let's advance to a higher time frame. Let's go to the 2-hour chart. And of course, the next candle prints or has printed at 7, and this is going to take us to about 8:59 a.m., 9 o'clock. We can see where we can have a move up, right? But as you look at the simple moving averages, we know that before this blue channel closes out, we'll be beneath it, okay? Because that is positive. That's a golden cross. You must be beneath golden before they close. And you must be before the death, above the death before it closes. So beneath the positive, above the negative. So you can see that as this begins to come to a close here, how you will most likely be above your death cross of the 111 and 700. The channel overall has to close itself, but you'll have some oscillations and pivots in there. You're in a zone of where a decision has to be made. You're in the midst of the 200 and 400. And as this golden cross closes out, again, the signal, a flash to the upside. And it may not be a flash, right? a move to the upside, and then possibly the downside. Now, the 50 and the 200, currently we're above it. We can oscillate within the solid black line channel. It's all negative we're looking at, except for the 9 and the 21, as the 2 and the 6 takes us down and above the 9 and the 21. So this is going to move down for a little bit because it appears the 9 and the 21 wind channel is about to close out, right? Even though we have this, it could be delayed or what have you. The 9 and the 21 death cross wants to come in. So we'll see how this plays out, because that channel, it can close or begin to close, or it can begin to open up. So this is interesting territory. We do see the markets cooling down, and we see the 21 simple moving average on an incline. But if we start landing candles on it and below it, then it's probably going to close out, especially if we go below the white channel in the midst of the blue of the 21 simple moving average. Right, and we should be above it before it closes. The 13 and the 48, you should be above it before it closes. And ultimately the 9, well, ultimately the 111 and the 700, you should be above it before it closes. All right, so that's a 2-hour time frame. And that's going to take us just a little bit into the future, as we can use geometry and about project when things are going to close with the 9 and the 21, but things are so dynamically going to move on the fly until you don't necessarily want to make a call like that. Again, you'd want to play it close to find the best entry and exit and to predict what's going to happen next. And that 5-minute chart and 11-minute chart is just a really beautiful thing in combination with your pi cycle tops and simple moving average. All right, 6-hour time frame going to give us more information. All right, this is looking promising. So if you want it to hold and not play such short-term volatility, then you can see the 6-hour time frame is showing you a better picture, but you have to be aware. You're in the influence currently of the 1 and the 3 that triggered the 2 and the 6. Can it change? Yes, but right now it just turned 7 o'clock. And we're 13 minutes into looking at this. So when we look at this, we see two things going on. The 9 and the 21 is keeping us above the 13 and the 48. When this 13 and 48 closes and it flips from negative, which we must be above before it closes, to positive, then it looks like we'll be coming down. And the lingering effect of the 2 and the 6 will take hold, as in the future will be beneath this 13 and 48 channel, and eventually beneath, well, the 13 and 48, because it will be positive once it flips from red to green, right? Once it flips from red to green. Before it does so, you'll be above it. And then we have to close out the 9 and the 21. And so you're up through the negative of the 9 and the 21 before it closes, and you'll be down through the positive of the 9 and the 21 before it closes. And after that, based on where you are, everything else may still be red. That's the 50 and the 200 still most likely will be red, as well as the massive 111 and 700 dotted white lines may still be red. So even on the larger time frame, and this doesn't have such a serious incline, but over time it's going to be a longer play. Look about what we can get to, and let's just go above the solid green lines because everything is on an incline. So about 250-ish as the hours begin to play out. Now, you can see visually what is likely to occur with the oscillations on price movement while counting cadence. And we see a tug of war going, right? Because you probably can't just drop right yet because of the 13 and the 48. You gotta be up through negative before it closes, even no matter how close. As we saw, it was a little messy on the 5-minute chart. So much that we had to blow up everything and expand it so we can see if things are holding true to the pattern. All right, so once we're in this zone of green, that zone of the 200 and the 400 simple moving average, the green dotted line, once we're in there, a decision can be made. but we see where the channel is currently of the 200 and the 50 and the 200 death cross, the black, right? That'd be a nice cut up through there, even though things are on the decline. So look at this price point, and I'm going to come just a little bit down. So 237. We still have some ways to go, even though most likely when this closes out, we can catch a wind up. The positive 9 and the 21 can feed off of the 13 and the 48, as everything is positive. We don't have to travel down just yet, because we can see this is being held off a little bit by the 1 and the 3 that wants to come in and slow down the 2 and the 6 from dropping. So that would be nice, especially at the last minute, just before we get the next candle. If the blue releases and leaves the red at the last second, and then the blue comes in, then that will help feed the 13 and the 48, along with the 9 and the 21, to help bring you up through the decision-making territory. Then we'd have to see what happens next. Okay, but like these moving averages, they could be elevators at certain floors of price point. If you hit that, then you know you're probably good to go to the next level. But you have to interpret all the information at the time. Resistance is greater than support, so we got some downward price action here. We see the markets are cooling down since dark red here, cooling down. Price went down just a little. All right, so we're playing this, and now we're looking at the pi cycle top, and of course it's saying like hold on and wait and see, right? It's not green, dark green, it's lime to orange. And we see the simple moving average pointing up for now. But we just started this 6-hour journey. We're 17 minutes into it. All right. And we're just going to stay right here. Let's go to the 12-hour time frame. I think 12 hours would be good enough, just so you can see what things look like, because on the higher time frame, things are really green. All right, so we're looking at the 12-hour time frame. Then we have to cut it off. All right, you can appreciate how that's blown up as the 111 and the 700 come in. Okay, so this isn't looking bad. We don't have to adjust anything. You can see that support currently is greater than resistance. Support is greater than resistance. As you count cadence, we know that there is a 1 and a 3 that can trigger the 2 and the 6, painting the candles from blue to yellow, all yet to be determined. Now, this candle started at 7 o'clock, or this candle here in this zone started at 7 o'clock. We're 17 minutes into a 12-hour segment. And you can see the 9 and the 21 death cross channel here. Before it closes, you should be above it. Perfect. Okay. Now we're looking at the 13 and the 48, the one in the midst of the orange circles. That's a death cross, 13 and 48. Before it closes, you should be above it. All right. And that has yet to be converged and come together. This right here, the 111 and 700, the dotted white lines, that's negative territory. And of course, because these are higher time frames and everything is sloping down, you can see about what the price points can be as you hit certain rims or edges of where we must be above prior to these channels closing out. All right, so we'll play it close with that said and done, in conjunction with counting cadence, looking at the simple moving averages of the 2 and the 6, 13 and the 48, the 9 and the 21, and the 200 and the 400, along with the weighted moving average of the 111 and 700. We can't forget the 50 and the 200. Looking at those pieces of information, you can judge where about price action must go. And I say must with a 90 to 95% certainty, before these channels close out. And keep in mind, sometimes they're on an upcline as you travel down through positive, and sometimes they're on a decline as you travel up through negative. So red is a pretty picture, but again, as you flash to higher time frames on the 2-day chart, then you have to respect the if this then that scenario. Let that load. And so you can see these price points here, even though the bottom rim is on an incline. Right? Sooner or later, we must follow rules of traveling down through the positive, but up through the negative on a massive scale. Looks a little scary, but dry powder on the side, buying opportunities may come into the future, as of course this is on a serious incline. So let's go about here. So we're going to play this thing close, and this is one of the reasons why you don't necessarily leave your crypto on an exchange. If you were at the mercy of buying and selling critically, the exchange can go down with a freeze as the excuse on many platforms such as Binance. While the big guys, the institutions, are getting their trades in, the retail is usually exit liquidity, because you won't be able to sign in many instances while the prices are dropping, right? The big guys get theirs, but retail is usually exit liquidity. So I'm always playing it close here. Always playing it close. So I'd like to just take this away. So that everything expands and we can see the price points of what could potentially happen with respect of traveling up through the negative but down through the positive. And a lot of things can happen here, because we can see the 13 and the 48 in the midst of the dotted orange lines, positive and eventually to negative again, right? All interesting pieces of information here. From negative to positive, back to negative, back to positive. It's like, yeah. All right. So with that said and done, everyone needs to understand, I'm not a financial advisor. Nothing in this presentation is financial advice. Cryptocurrency, stocks, bonds, ETFs, ETNs, commodities, these things can be highly volatile. You could lose all of the money you invest. You should always do your own research and consult a qualified licensed professional. Your investments are your sole responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I nor the platforms containing this presentation for your review are liable for any losses. This video is strictly for entertainment and leaning heavily towards the educational purposes side only. With that said and done, I'll see you hopefully within a few hours on the next episode.